But what we are really expecting for this market, which is utilities coming back to the term market in size, that hasn't happened yet. And when that happens is where we're really going to see the move. So just seeing the price go from 63 to 84 and the equity is doubling and in some cases tripling, what happens at 150? Going from 83 to 150 or going to 150 to 200. I mean, I do think that is coming. So big moves I still expect in the coming months. And for the next, let's say 12 to 24 months, I expect a very, very robust move for the sector amongst a general commodities bull market that I think it is in its infancy.
You're watching Capital Cause, and my name is Danny. It is September 30th, 2025, and my guest today is the uranium insider himself, Justin Huhn. Justin, thank you so much for coming on the show, my friend.
Always good to see you, Danny. Thanks for having me again.
Yeah, it's always a pleasure, man. Great to have you. Let's go ahead and dive into some of this interesting news. I think the biggest news item right now in the uranium space is this swallowing up somewhere north of 800,000 pounds of U3O8 by SPUT, the Sprott Physical Uranium Trust. Explain to the audience the significance of something like this. And despite this huge acquisition by SPUT, the vehicle still hasn't moved up as much as one would anticipate would be proportional. Why do you think that is as well?
So yeah, the 800,000 pounds was a single day's acquisition by SPUT. They purchased that, I think it was last Thursday, if I recall correctly. We're recording this on Tuesday, the 30th.
Yep, the 25th.
Yes, that was a single day purchase of 800,000 pounds. The numbers are shockingly higher if we go back over the course of a 2-week period. SPUT in 2 weeks, let's say 10 trading days, has raised $250 million through their ATM. And they have purchased 3 million pounds of uranium. So we haven't seen this type of move from SPUT in terms of being able to raise this level of cash and buy this much uranium in a very long time. They had a couple of fits and starts, late 23, early 24. Prior to that, we're really talking about when the ATM went live for the most part. And right. That was, the first few months in, August through October of 21, spring of 22, they had another run. Since then, they've traded at a pretty persistent discount with, like I said, a few fits and starts here. They had a day here, a day there, maybe 2-day, 3-day kind of situation, raise a little bit of money. They've basically traded it now for the last 2 weeks and even beyond that. So this is definitely a 180 in terms of sentiment, in terms of funds flow. We're seeing the funds flow come into the sector as well. Finally, earlier this month in late August, we saw the ETF start to increase outstanding share count, which was a shift. Even as the sector started to rally off the lows in April, we had continued redemptions from the ETF, especially from URA. That was primarily driven by JP Morgan selling, oh my God, I think it was pushing 15 million shares of URA over a couple of months. They sold the lows, unfortunately for them. But since then, it was sort of kind of on par. And then over the last 6 to 8 weeks, we've seen the ETFs, that starts to turn. Increasing outstanding shares, the funds flowing into the ETFs, funds flowing into SPUT, and the equities have had a great rally. SPUT basically trading at NAV, so it's moving right along with the spot price of uranium. And the spot price of uranium has moved up from the mid 70s. I think it peaked at about 84, which was last week, prior to that 800,000 pound purchase. So pulling back here a couple of dollars. SPUT still has a little bit of money to spend. They raised a little bit of cash yesterday. And we also had Yellowcake come in and be able to exercise their 2025 option to purchase $100 million worth of uranium from Kazatomprom. So they raised that $100 million, they upsized that to 175. So following the finalization of that transaction, of that financing, and whatever fees that they incur from that financing, we figured they'll be able to spend about 50 to 60 million in the spot market, in addition to any further purchasing from SPUT. So it's been quite a roaring couple of weeks for the sector, and to see SPUT come in and clean up those, quote unquote, easy pounds prior to seeing utilities come back into the market is a brilliant setup in our estimation. So would we like to see more participants in there? Absolutely. And the traders are fully active in this market. Traders love the SPUT action, by the way. As far as the utilities go, when the financials are hitting hard like they are now, the utilities are going to step back. They've got a lot of utilities have new budgets starting 2 days from now on the first of the month. Excuse me, that's tomorrow. And then we also have a fuel conference happening in Charleston later this month, later October. So those two elements are going to lead to more utilities coming to market. In the meantime, SPUT continues to gobble pounds, and it's great to see.
Yeah, and I have the uranium spot price on here, Justin. And while the miners have been making, you look at URNM, this is an all-time high for URNM. Granted, URNM has only been in existence since 2020, but you look at some older ETFs like URA, I believe this is a 13-year high when it comes to URA. So you look at URA today, and you have to go all the way back to 2012, the summer of 2012, to reach back to these levels. So with the ETFs making these new highs and the metal itself, the spot price still somewhat below its most recent high in 2024 of 100 and some odd dollars back then. What does that indicate? Are the mining stocks, the smart money, sniffing out something coming into the uranium play, or are the mining stocks benefiting off of this this injection of growth that we've seen in the broader economy? Right, you have all you have the Max 7 benefiting off of it. In a way, uranium is kind of in that realm as well. How do you square this circle?
So I think what we've seen, I mean, obviously we've seen a nice move for the miners relative to the metal. And this has actually been historically a relatively big move. We've seen a bigger move from, let's say, August of 21 into August of 20, late 20 into late 21. So December of 2020 through November of 2021, that first big leg for the market was a very, very strong move. And again, you're charting URA there, which is fine, but URA has become much more, let's say, much more of its overall AUM is made up of non-uranium stocks. So right. A lot of the performance of URA it's being pulled up by a couple of meme stocks that aren't necessarily even in the uranium space. So nuclear stocks like Oklo, Centrus, things like that have been pulling URA significantly higher. So that's, I mean, is what it is. It's not exactly a quote unquote uranium ETF any longer, because I think that a lot of that has had to do with liquidity of those meme stocks, which is why they haven't sold them down. But either way, URA has outperformed for that reason. URNM, same thing. If you chart that against the metal like you have here, it's been a very, very good move. We think this move still has legs. And part of the reason why is because the spot price has only just started to move, and it started to move based on financials coming into the sector, not the fundamental end users driving the price, which is really what we want to see. And that is what we saw back then as well. We saw everybody participating in that first big move. And that first big move really was, recognizing a contrarian play in the mining stocks and the fact that the sector had not really moved yet, even coming off the bottom of the price lows, because the price lows for spot uranium was 2018. And this sector didn't really start to move until late 2020, like 2 years later. No, I'm sorry, excuse me, I misspoke. Late 2016 was the spot low. So it was 4 years from the spot low before the equities really took off relative to the metal. So could we see a pullback here? Absolutely, we absolutely could. And possibly, technically, I think that would be perfectly healthy for that to happen. But it does seem like the equities are sort of looking over the valley here. I do think that there's a significant amount of smart money and institutional money that is recognizing that the price is inevitably heading higher, and these mining stocks are going to have to ultimately price in much, much higher priced uranium. So that's what it looks like to me. It's also possible that we saw a decent amount of positioning in the equities first, because I can tell you that the funds flow into SPUT sort of happened second. Yes, the miners have continued to move with the spot price and even breaching the move of the spot price, right? Because that's what this chart is showing you, that it's moving up relative to spot. But the big move for the miners relative to the metal, I would argue, came at the earlier part of this. So early April through, a couple of weeks ago. Now we're seeing much more funds flow into the physical metal. So Perhaps the bigger opportunity is there for the short term, or perhaps the mining stocks, like I said, are looking over the valley and pricing in a higher priced uranium that's going to have to come. Now, with all of that said, if the price of uranium stagnates here for a moment, we'll probably see the mining equities pull back, which would be absolutely acceptable and perfectly healthy for that to happen. As far as we can tell, this move is just starting. We have not seen, like I said, the utilities come into the market in size. They've been accumulating, kind of a slow accumulation in the spot market and through carry trades all year. That slowed down starting late August, early September with WNA in London. Utilities kind of took a break, went to that conference, talking with all the counterparties. Like I said, a lot of them get new budgets tomorrow. And then we have this big NEI fuel conference at the end of October. So the seasonality move is literally in its infancy. And what's really interesting, Danny, is this seems like an anomalous thing with what's happening in SPUT right now. But historically speaking, strangely, the first half of September is basically dead in the spot market. And the second half of September, there's usually a lot of action in the spot market. And that happened again this year. So there's a lot of historical precedents that are playing out in a typical seasonal manner right in front of our eyes. But obviously, the amount of money that SPUT has been able to raise through the ATM, this is a new instance here. We have heard that there was prior to this run that SPUT has had and the money that they've raised, significant interest in another private placement. But as far as they're trading it, as long as they're trading at NAV, there's no reason for that to happen. They're just going to continue to issue shares through the ATM and keep doing what they're doing. So we'll see how the coming weeks go. Like I said, we've yet to see the utilities really come in. When that happens, we expect sort of the next leg of this leg to continue. And we still continue to expect a very, very strong move for the sector and the price over, let's say, the next 6 to 12 months.
Interesting. Do you share that same sentiment with, let's say, URNJ, which represents the junior mining stock? Are we seeing any overperformance relative to the regular majors? I mean, there's not much data when it comes to URNJ, but from what we can tell, what's your prognosis here? I'm going to go ahead and move it to a daily candlestick to get more data.
Yeah, we've seen off the lows a nice move higher. We're still basically back at parity. So it's not the true outperformance of the small and mid cap certainly isn't there. And URNJ really only excludes a couple of large cap stocks, right? It excludes Cameco and Kazatomprom primarily. It also doesn't hold SPUT. So it only excludes those two large caps, if I recall correctly. Of course, it includes a number of smaller caps, but we still have not seen sort of that uranium equities mania where just everything in the sector is on fire. That is not what we've seen in the last 6 months. In the last 5 or 6 months, we've basically seen a reversion to the mean from a wicked sell-off and a decent recovery in the spot price. It went from the lows of 63. It's about $20 up from the April low. So it's a move that is sort of to be expected. Like the price was too low for too long. That is slowly shifting. We finally saw UXC update their long-term price for the month of September. It's up $2 a pound to 82. Still, that price doesn't really tell the whole story of the term market. Importantly, they raised their prices for the 3-year forward and the 5-year forward price, which is a more accurate sort of price for the term market. So 3-year forward is 90, 5-year forward is $98 a pound, and that's kind of really the price you're paying for delivery out that time frame. So ultimately, when you continue to see contango in this market, that tells you the general direction of where the price is headed. If you go back to the bear market, those 3-year forward, 5-year forward prices were actually lower than the front month during the bear market. So as long as we see that, we know what we expect going forward, higher prices.
And so to kind of tie in some macro, just last week, we had the announcement from the Fed that they were going to cut interest rates by 25 basis points. Typically, how does a sector like uranium behave? What is the relationship between, I guess, the ease of capital, or at least at the very minimum, the short end of the yield curve coming down? What can you expect, let's say, from these oncoming rate cuts?
Sure. Well, I think generally as a commodity, it should benefit from a lower dollar. So if the market is pricing in 2 more rate cuts this year, and it's sort of this anything but the dollar trade happening right now, and I think that this is going to last for some time. That will generally benefit uranium as a commodity, to speak very generally. The lower interest rates are, the lower the cost of borrowing, the tighter the spot price will be to the midterm price. So all things being equal, if the midterm price stays flat and interest rates come down, the floor and spot will be higher because the cost of carry is less. Therefore, the spread between the front month and the forward curve shrinks. So the cost of capital is lower for carry traders. They'll be able to buy a little bit higher in spot and still make the same profit margins, if that makes sense. So it's generally beneficial. I wouldn't say it's a major driver where interest rates are at. We've seen a interest rate hiking cycle for a period where we've seen the prices across the fuel cycle rise. So it's not a primary driver, but it's a small tailwind, let's say.
Is the oil lower? Or actually, let me rephrase this way: are lower oil prices, are they a tailwind or a high or a headwind? Yeah.
They're not really either. Generally speaking, they will affect more so existing plants that are currently operating and the profit margin of those plants relative to the profit margins because many utilities are operating across the space. They've got gas plants, they've got coal plants in some cases, they've got solar fields, and they've got nuclear plants. And that's very, very common for utilities, especially in the United States here. Lower gas prices certainly makes it much more of an incentive to build gas plants rather than build new nuclear. But for the most part, the investment thesis is not based whatsoever on nuclear plants being built in the United States. So we actually are modeling for basically 0 new nuclear plants to be modeled in the US. And that's according to our models, right? Being built in the US, excuse me. But do we believe that we will build nukes in the United States? Yes, we do. Are we modeling for that? No. And the thesis is not contingent on this happening. As far as the existing plants in the US, all of these are getting life extended, whether gas is at the price that it is or it rises a few bucks. It's not really going to matter. We're going to see there's such an insane demand for electricity right now in the United States that we're going to see life extensions across the board for the existing fleet. So doesn't really affect us. In the long run, if gas stays very low for a very, very long time, that would likely disincentivize utilities investing in large, expensive new nuclear operations and new nuclear plants. With all of that said, gas has been relatively low for a relatively long time. We're seeing life extensions across the board of the existing fleet. So there's a tiny, tiny bit of correlation to the oil and gas market, but it really is kind of in its own bubble.
Yeah. So here we've got the uranium spot price divided by the oil spot price, and kind of get a good feeling of the ratio there. Looks like we're above average when it comes to the ratio, meaning uranium is currently outperforming the oil price. And I think you kind of alluded to this here just a few seconds ago. And when the profit, this is kind of a proxy for the profit margins of these uranium companies, is it not? Because you've got the cost oil acting as a proxy for cost, and obviously the uranium is the end product. So it's the bigger your ratio, the wider your profit margins are for these companies. Is that not what we're looking at now? Or are these uranium companies, these mining companies, are they not seeing a widening of their margins as the oil price continues to be subdued while spot price moves up relative to it?
Yeah, the lower prices for oil, gas, diesel, that definitely benefits the mining companies for sure. Yeah, that's a tailwind for the mining companies, absolutely. As far as profit margins for utilities and the cost of the fuel, uranium makes up about 40 to 50% of the total cost across the fuel chain, and uranium conversion, enrichment, deconversion, fuel fabrication, all of that combined in the US is about 10 to 15% of the total operating budget of the nuclear power plant. So it depends on the market that it's in, that it's operating in, regulated, deregulated. But all of that is to say that price matters, but it's not the absolute bottom line. And all of the utilities, especially here in the States, are now operating in an environment where they're their margins for selling electricity are better than they've ever been due to the rising cost of electricity and the huge demand that they're seeing. An interesting note on this is we had a conversation recently with a representative from Holtec, and Holtec owns and will soon be operating the Palisades plant in Michigan. They're also designing a Holtec 300 megawatt SMR. And I asked this person in this interview, what consideration for the cost of fuel went into any decision into restarting this plant? And he said none. They didn't even, it wasn't even a thought at all whatsoever. It has not even been a topic of discussion at any point in the last 2 years of turning this plant back online and operating it for the next 40 years. So Holtec is making this multi-billion-dollar decision. Yes, they're getting funding. They're getting loans from the DOE, additional funding from other programs. But looking out at operations for 20 years, not a single person, and I'm not faulting them on this. This is just to say that these decisions of life extending plants, of operating plants, they're not looking at the WNA's fuel report and saying, oh, this is a problem, let's not do this. They're saying the fuel has always been there. It will always be there. The price goes up, the price comes down, whatever. We're doing this either way. So it matters. It matters in the moment. So when you're going into the market to procure, to cover your uncovered needs for fuel, you're going to do what you can to get that fuel from a reliable source at the best price that you can. But making a 10 or 20-year decision on extending a plant or restarting a plant, you're not even thinking about, oh, what is the price of uranium going to be in 2035? It's not even one element of decision making for that bigger decision, which is, I thought was very, very interesting.
Yeah. Well, Justin, I mean, this is why, we bring you on here. I mean, you've got the only uranium-based newsletter out there. And, it's often been the case, or it's often been called the case, that uranium is the rock star of all the commodities. So if you're into mining stocks, if you're into energy stocks, and you're not allocated into uranium, then I highly encourage you guys to look into uranium stocks. And if you are going to look into uranium stocks, then I encourage you to check out the Uranium Insider newsletter, of which we have a special discount link below. Be sure to check it out. Justin and his team do a wonderful job in scoping out the market and giving you some of the best detailed insights and analysis out there. So, we all have jobs. We either have our 9-to-5 jobs, or we have our own businesses that we run. Some of us may not be able to entertain this market to the extent of, someone like Justin and his team will. So they're kind of like your outsourced research team. That's the way I like to think about it. And so if you'd like to take advantage of it and really capitalize on this uranium market, stock picking is key. And you could all just go out and just buy the ETFs, URNM, URNJ, some of the big names like CCJ. But if you want to really take it up to the next level and find the right stocks, Justin, you've got a whole list of different picks outlined for your members. So again, I encourage you guys to check it out. We have a special discount link below. Justin, anything else you want to talk about that we didn't get into before you wrap up here?
I think we covered the basics for what's happening now. I would just say keep your eye on the physical market. Watch out for what's going to happen in the next month to 6 weeks in the term market. That's going to point the way forward for the coming months. And this great move that we've had from the April lows till now, it's been an awesome year, despite the terrible start to the year that shook out a lot of retail. A lot of people dumped between March and April, unfortunately, and sold the lows. But they weren't alone, right? Like I mentioned, JP Morgan dumped their URA position over, April, May, and missed this big move that we've just experienced. But this big move is just coming off of, kind of, like I said, a reversion to the mean and some cornering of the market by the financial entities. And honestly, if these, as Nick Lawson from Ocean Wall states, the apex financial predators, when they really come after this market, it is so small that you can see huge moves. It's a very volatile market. So if you like volatility and you're looking for outsized, let's say, outsized volatility that hits both ways, right? We saw the downside January through April, and then we've seen the upside since then. And honestly, we have not yet seen the utilities come into the market. And so I keep saying this over and over, the big event that we've been waiting for since 2019 has still not happened. It's been a wonderful trade. It's been ups and downs and gut-wrenching pullbacks and euphoric moves higher. We've experienced it all multiple times over since 2019. But what we are really expecting for this market, which is utilities coming back to the term market in size, that hasn't happened yet. And when that happens is where we're really going to see the move. So just seeing the price go from 63 to 84 and the equity is doubling and in some cases tripling, what happens at 150? Going from 83 to 150 or going to 150 to 200. I mean, I do think that is coming. So big moves I still expect in the coming months. And for the next, let's say 12 to 24 months, I expect a very, very robust move for the sector amongst a general commodities bull market that I think is in its infancy.
Very well said. Thanks for taking us home, Justin. Where, I usually ask where can people find you if they want to see more of your work, but obviously we're going to have the link to your newsletter down below. Check out the discounted link. Check out the special link down below to get a special discount that you can't find on the website. And then like and subscribe to the channel. Comment, go Justin, go in the comment section. If you agree or disagree with anything we talked about, do let me know. I do, in fact, read the comments. So drop me your thoughts down below, guys. And by liking, subscribing, commenting, doing all that YouTube stuff, it really does go a long way in helping push this video and this channel up in the algorithm. So it may not seem like much, but a little bit goes a long way, and it's free. But if you'd like to support me monetarily, then consider becoming a member on my Substack at capitalcosm.substack.com to get access to all my stuff early, ad-free, and uncensored for the videos that warrant it. So thanks for watching, guys. I'll catch you later. Bye.